Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Harmis Patakia. Things are quiet for the markets as we speak at 11 o'clock. Flat on the Nifty, flat on the Sensex. Mid-cap is up close to about 0.5%. But top honors today go to the IT sector. The Nifty IT sector is up 1.5%, leading from the front with names like Tech Mahindra, Infosys, HCL Tech, all fighting and batting for the bulls. Metals too is having a good day. Defense has rebounded after yesterday's softness. And on the way down, it's ICICI Bank under pressure for the second day in a row and top loser today on the Nifty.
Well, par for the course, right? You're up 600 points in 4 sessions. You're taking a bit of a break. Of course, there are a lot of things that are awaited globally as well. So the market's taking a bit of a pause today, as is the global markets. Of course, the Dow futures are up almost 125 points in anticipation of a positive outcome. But the Nifty Bank, which has been a rank outperformer recently, is seeing some bit of profit booking, 250 points lower on the Nifty Bank. And that is weighing on the Nifty as well in today's trading session. But of course, there are lots of movers in the broader markets. The mid-cap index is still in the green, as has been the case over the last few trading sessions as well. Jindal Saw is up 11% now, as Nigel was highlighting all through the morning about it potentially being the stock of the day. The capex plans being announced, valuations as well on the lower side. So 10.5% higher on Jindal Saw. TBO Tech is the other one, 5.5% higher there as well. The defense, as Reema was mentioning, seeing a bit of a rebound in select names. Data Patterns is up 5%, recovering everything that it lost in yesterday's trading session. And some of the high flyers from yesterday are seeing a bit of a profit booking as well. RBL Bank is one of them. Westlife Foodworld yesterday was up 11%, down about 2.5% in today's session as well. But among the top movers on the index today, though, is Grasim, and that is after Morgan Stanley has upgraded the stock. And Nigel is here with more details on that. Nigel.
Well, that's right. Morgan Stanley has gone ahead and they've upgraded the stock, and they've upgraded the stock to overweight, and they've upped the target price on 3,500 rupees per share. They say there are ample triggers in the medium term to support the stock price. So a couple of factors that they've highlighted. The paints launch, they say, is much better than what they were working with. And that's why, as a value given to the SOTP, earlier they were giving around 160 rupees to the paints business. But now, in fact, they've upped that number to, close to around 350 rupees or thereabouts. So that's one. They're quite bullish on, the value proposition coming in from the paints business. Next up, they're talking about the cement business. And the cement business, they're very, very optimistic on Ultratech Cement. And because of that, they're saying that Grasim stands to gain because Ultratech Cement's earnings will compound from here on. Point number 3, they talk about the new businesses and the way they see those businesses scaling up as well. So they're positive on that. And finally, they say there's a holding company discount that they expect to narrow from here on. So that's going to be important. All in all, they say that Grasim is one of their top picks, explains why the stock is up close to around 4%.
Thank you for explaining that. Moving on to Sona BLW, which is under pressure today after a Bernstein note. Sudarshan is now joining in to tell us why.
So Bernstein has downgraded Sona BLW to market perform from outperform, and target has been cut to 540. It has mentioned few risks, and first one is Trump and Elon Musk tensions. Second is proposed bill phasing out EV subsidies. Third is ongoing US-India trade issues. And fourth is rising strength of Chinese OEMs. It says it sees risk of earnings downgrades because company has significant US exposure and bulk of its order book is tied to electric vehicles. So for Sona BLW, 77% of its order book is tied to electric vehicles, and 40% of revenue comes from US. And its largest customer, a US EV OEM, forming 15 to 20% of revenue, has been losing market share. Now, on the back of this, Bernstein believes that it's going to face earnings downgrades, and Bernstein has lowered FY 27-28 O2 estimates by 4 to 5%. Currently, you can see the stock is down more than 1%.
Weighing on the stock is the Bernstein downgrade for Sona BLW. Hasn't done much over the last month as well, and isn't doing much today despite the downgrade as well. Just 1.25% lower is Sona BLW. But we just mentioned Jindal Saw, and that is the top gainer on the Nifty 500. Nigel is still with us to give us more details on that. Nigel.
Well, that's right. Jindal Saw is buzzing in today's trading session. But if you look at the last 6-month chart, you'll see that the stock actually is sharply lower. So one of the reasons was the street is searching for some good news on a stock that has got badly beaten out of shape. And yesterday, that good news did come about. They have gone ahead and they've said they're going to be laying out a capex in the Middle East. That's both in the UAE as well as in Saudi Arabia. And they're looking at setting up facilities. So the total investment is more than $100 million of equity contribution. Now, the street likes this because the hint that it's giving is that there's ample demand out there and this capex will fuel growth in the time to come. So this capex takes away that one concern with regard to no growth coming in for the company. The very fact that they're laying out capex, which will come on stream in the next 12 to around 36 months, the street likes that. Besides that, valuations as well are supportive. The stock trades at around 5 times, less than 5 times, EV upon EBITDA, that's on a forward earnings basis. So 3 points that are played out here. One is the stock has got badly beaten in the last few months. The second point is this announcement of capex tells you that there is visibility in terms of growth going ahead. And point number 3 is that valuations are supportive. Explains why the stock is up and about in today's trading session.
Okay, thank you very much for that. Let's talk about the telecom space. And here I'm referring to a CLSA note where they're referencing TRAI's latest data, which has analyzed the year gone by. So we know that the Indian telecom market is a 3-player market. It's Bharti, Reliance Jio and Vodafone Idea. And Reliance Jio and Bharti are only strengthening their foothold in the Indian market. So they're saying the sector itself did well last year. The top line for the industry grew 13%. This is courtesy the tariff hikes that they took. So the top line growth was good. In that, Bharti Airtel was the leader with a 18% growth. Vodafone Idea lagged, just a 1% growth despite the tariff hike. Jio was up about 14%. But on the whole, the industry revenue is up 2x from the FY19 lows because we've had 2 rounds of tariff increases. So, the industry revenues have doubled. In terms of market share, Jio's right on top with 41.8%, followed closely by Bharti Airtel at 38.7%. So Jio is on top, but last year, Bharti gained more market share versus Jio, and Vodafone Idea is struggling. In fact, Vodafone Idea has lost 27% of its market share from the peak in FY17. So that's, fairly sizable. So from having a market share more than 30%, it's now down to about 14%. Also, what CLSA says that Bharti and Jio's dominance, they account for 81% of the sector revenue. And according to their estimates, that the dominance is only going to get stronger and their revenue contribution could go up, not contribution, they will account for 85% of the sector revenue 2 years hence. So just some, data which puts into context the state of play for the Indian telecom market.
I still remember Vodafone Idea when it was Idea Cellular once upon a time was part of the Nifty.
Yeah.
It was excluded from the Nifty in March of 2017, and since then it's just been on a downward spiral after the merger as well, the rising debt burden. Of course, there are bears on the street questioning whether this 3-player market would just end up becoming a 2-player market going forward. We'll keep an eye out on the telecom space. Take a short break, but just before we do that, CNBC-TV18 Access is a premium membership-based service available on CNBC-TV18.com. It offers members exclusive content, market intelligence, and expert thought leadership. Now, the membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions, and masterclasses, and curated lifestyle benefits. Designed for an immersive and enriching experience, it empowers members with premium business intelligence and unique lifestyle benefits. The power of insight, the privilege of access, exclusivity, experiences, and influence is yours to claim. You can become a member by logging on to CNBCTV18.com/access/plans. Take a short break. Back on the other side. Welcome back. Shifting focus now to the commodity space. Manisha Gupta is joining in, and we continue to put the spotlight on the rising crude prices, Manisha.
Well, yes, that's because the overnight markets have seen further gains coming in for the crude oil prices. Well, let me remind you that last week was a 4% of gains for the Brent prices and 6.5% of gain for the US crude prices there. And we seem to be trading higher even in this week. So 65 and 67 on your screen. So it's been a good run up that we've seen come in for the crude oil prices. So much so that at $67 a barrel, it is a 7-week highest coming in for for the crude price varieties there. Well, there is renewed optimism when it comes to US and China trade agreements, and the markets do believe that it could be, pardon me, a week, 10 days, that we could be looking at something positive coming in from there. That seems to be supportive. The markets also are looking at the peak summer driving season demand in the Western world, US, Canada. That is where the summer vacations will soon begin. And with the way that we have seen inventories move, shows you that the demand perhaps is picking up there. Russian reaction to Ukraine attacking their air bases also seems to be adding premium to the prices. And then the markets have seen the China export grow at a 3-month lows. That perhaps could be capping some gains here, because when we look at the quantity of Chinese imports for the crude oil for the month of May, that also has been slightly on the weaker side. Having said that, the OPEC May output, though, has seen a bit of an increase there. 150,000 barrels per day is lower than what the street was anticipating or calculating, or even by the calculations that OPEC had put out. So that's yet another supporting factor there. So more supporting factors, and the fact that the US dollar index is trading slightly on the weaker side has added impetus for the prices to go up.
Thank you very much for that. We will slip into a very short break. On the other side, Abneesh Roy of Nuvama Institutional Equities will join in. Stay tuned. Welcome back. In the morning, there was this Bloomberg report which said that Diageo PLC is weighing a stake sale in RCB. The IPL team, Royal Challengers Bengaluru, Diageo PLC, is holding discussions with potential advisors as they weigh the possibilities, and the valuation sought is about $2 billion. So to talk more about this story that Bloomberg has picked up, CNBC-TV18 is not independently verified it as of now. We have Abneesh Roy, Executive Director at Nuvama Institutional Equities, now joining in. Abneesh, thank you very much for joining in. So specifically about this story, if value unlocking happens, what impact will it have on the stock of United Spirits? And two, what would the proceeds be used for? Debt reduction? Would it be for capex? Do you think shareholders will get some benefit on account of that by way of return?
Thanks and good morning. Yes, we have a buy on United Spirits with a target price of 1885. And if this event happens, yes, it will be a positive. Based on our analysis, we currently give around 146 rupee kind of a value in the total 1885 target price to IPL team. We don't do SOTP based on the 60 times overall console profit, and then IPL team made 177 crore profit FY25, etc. Our value is around 146, but if we see based on what the Bloomberg article is talking about, then there is almost 235 rupee kind of a pricing for that. But here, lots of ifs and buts are there, whether the entire team will be sold, whether part or nothing will be sold, right? Because clearly Diageo or United Spirits in the past has said that they don't have any plans as such. So we'll wait for confirmation there. Second is, of course, this time's IPL was won by the RCB. So clearly premium valuation rub-off effect should be there if at all this happens. Third, of course, is from an overall business perspective, we are quite positive. We have a buy, and multiple positives are there for the stock because clearly in the UP, the number of retail outlets has increased. In Andhra, the entire industry is seeing benefit because the market has opened up. Even in Karnataka, the taxes have reduced in the premium whiskey. And in FY27, we'll have the UK FTA benefits come in, both in terms of volume in the premium and luxury end. And even in the margins, we'll see the raw material scotch coming down. So FY27 also, we do see trigger. And apart from that, overall urban slowdowns is there. But if you see in Q4, United Spirits did report 9.2% volume growth in the P&A. And now with food inflation cooling down and interest rate cuts and overall salary, the benefits which government gave, I think overall FY26 is looking good with a high single-digit kind of volume growth for the company in the prestige and above. So we are positive.
Abneesh, good morning. Thank you for joining in. The prestige and above segment did well for United Spirits in the fourth quarter, but the popular segment continued to struggle, right? There were expectations of growth, but that didn't happen. There were negative growth in the fourth quarter. Do you see that as a one-off, and do you see things improving going forward in the popular segment as well, especially considering the fact that the P&A has done fairly well, and now with inflation coming down, with the rate cuts, tax cuts and all of it kicking in, does the popular segment also see a revival?
So two, three things. Good question. What we are seeing clearly, one is premiumization is happening. So there is a trend that even at the lower end, from the popular, there is some level of premiumization which is happening. Second is if you see most of the urban slowdown is impacting the marginal customer. That's why even in FMCG, if you see for Marico or for Tata Consumer, etc., the mid and premium is growing strong double digits, while overall FMCG also the pain is at the lower end. So this is not a aberration. Your question was the Q4 weak number in the popular an aberration? No, we don't see an aberration. Q3 had one of when the strong numbers were there. Overall, we see that P&A is what will drive the business. That is the focus. While popular is now more of a weak growth in the near term because of the urban slowdown, because it is not a high priority and premiumization is happening. So we are more positive on the P&A rather than on the popular.
Thank you. Amnish, we leave the conversation here for now. Thank you very much for joining in. So bullish on United Spirits. And if this monetization takes place, then the target price inches up even further for Nuvama. Mitesh is now with us, joining in for a quick technical check on the markets. Mitesh, quiet. So how would you assess the day, taking a bit of a pause after the two-day rally, and your individual stock ideas?
Yeah. I think this pause doesn't actually bother me. We are still above the previous swing pivots, and that's the case both in Nifty and the Bank Nifty. So I'm pretty okay. Just from a cautionary point of view on the Bank Nifty longs, the stop loss should be now trailed to about 56,480 on the spot. Similarly, for the Nifty, the similar level will come at about 25,030. So maintain long positions, and that's the way we'll approach the index. On the stock side, I have a buy on Bosch Limited, which I would recommend buying with a stop at about 31,650. Look for targets of around 32,500 or thereabouts on the upside. And the other one which I like is Birla Soft. That's a buy with a stop at about 420 for targets of 450.
Mitesh, anything on the Aditya Birla Group companies, be it Grasim, be it Ultratech? A lot of positive brokerage commentaries coming in earlier in the day.
See, Grasim does look like a good bet to me. I think, with that positive brokerage note also. But the only worry is that this is not a very good entry point. So if you get it around, let's say 2675, 2670 zones, buy with a stop at 2640 and look for a target in excess of around 2800.
All right, Mitesh, thank you so much for sparing time and joining us today. And we'll have you back later in the day with your trading ideas as well. Take a short break. Up next, Market Fundamentals with Unmesh Sharma of HDFC Securities. Stay tuned.
Welcome back. Coforge continues to be right on top of the IT pack today. JP Morgan did a fireside chat with the CEO, Sudhir Singh, and the CFO of the company, and they came away very bullish. They're saying the management is as bullish as ever, with no signs of the macro uncertainty which is plaguing the rest of the sector. Which is why JP Morgan overweight rating, target price 2080, top pick in the IT pack. Now, these are some of the key takeaways from the management interaction. One, the company expects FY26 to be a robust year of growth, even outside of the Sabre deal. H1 will be strong, H2 even better than H1, and they're not dependent on discretionary spending to recover. They are trying to increase their wallet share in the existing tech spends. And also they're very confident about FY26 being strong because of the kind of order book and the visibility that they already have. So it's not that they're dependent on the macro to turn for the year to be a robust year. Secondly, margin expansion is on track. 12.6 with the margins in FY25 expands to 14%, and they're achieving their margin guidance ahead of schedule. And the third thing the note talks about is what differentiates Coforge from the rest. And here it's about execution and being proactive in their sales cycle. So they're not passively waiting for RFPs, request for quotes or request for proposals to come from clients and then bid. the sales team is proactively going out there and winning deals. So they're getting more market share, and this is the differentiating factor. So the target price is 2,080. The stock currently is at 1,860. So still more upside to go. And today, of course, it's doing well, 4% up.
Tailwinds, headwinds, the one thing that has been constant is positive commentary from Coforge. I don't remember the last
they've delivered also.
And they've delivered, yes. They've promised and they've delivered. That is the more important thing. And the street has rewarded the stock adequately as well, right? 21% higher in the last 1 month. And over the last few years as well, it's been a very, very strong return generator for its shareholders is Coforge. 4% higher on the stock today at 1864. JP Morgan sees the stock going up to 2,080. Well, Unmesh Sharma from HDFC Securities is joining us now on the show. Unmesh, good morning. Thank you for joining in. And I remember the last time we spoke, I asked you about large private financials, and I had asked you that how long can you keep hoping the fact that, okay, it's a value play and sooner or later it will deliver the value. It's been happening for the last month or so that private financials have finally managed to step up, taking the Nifty bank to record highs. Do you see more upsides here despite the headwinds to their margins, considering the rate cuts that have come in from the RBI?
Yeah, I think that call has finally started to play out. I think in any case, this is the type of market where you would rather be slightly early than slightly late because, the catch-up rallies happen so fast. But having said that, I think that there is a couple of structural tailwinds which have come through, which kind of, early signs were visible even 6 months ago. One is that we had a very strong conviction that liquidity through the calendar year of 2025, especially in the second half of the calendar, that is, will be quite strong, which has started to play out. Of course, we did not predict the CRR cut of 100 pips, but in one way or the other, we knew that liquidity is going to become easier in the year. The second is the rate cycle, which again, but I think the one big factor which has played out, which is very good for all private banks, but also for all lending non-banks also, but lending financials, has been this commentary that at an aggregate level from the Reserve Bank after the policy, that at the aggregate level on the unsecured lending, the concerns seem to be kind of receding. I think if you put a combination of these three things, I think the call's playing out exactly how we had seen it fundamentally. And so we continue to remain very constructive. Also, they have big weights in the index. We believe that there is absolutely no reason that any large portfolio should not be overweight on the financials.
Got that. Unmesh, on the whole, this recent run-up has left limited room for upside. Even valuations are slightly higher than the historical levels. So in this context, if someone wants to make money, what is the approach? Which stocks would you recommend? Where do you generate that alpha?
Yeah, so look, I think, interestingly, when even if you look at 10 years ago, the average PE ratio, since we're talking about valuations, I'll tell you that the average PE ratio used to be 16, 17. The other day, our strategy team has put out a very detailed report where they were talking about the average for the last 10 years on a 1 year forward, which is basically what would be FY26, is an average of almost 20 and a half, 21, right? And that's where the market is. Now, the thing is that 20, 21 and a half on a very long term, if you look 2 decades, it's a little bit more than one standard deviation above. But I think that as of right now, given the situation of the liquidity, the fact that India macro generally seems to be okay, we believe that this premium to a very long-term kind of average, which has persisted for the last few years, will continue. What that means is that as we approach the second half of this fiscal year, or let's call it the Diwali season, what will happen is that people will start looking at FY27. Now, if you get 13, 14% earnings growth CAGR, as in for this year 13 and next year, let's say 15, and then on that number, we are actually at only 17.5 or 18. So we can see why valuations while the market may go sideways, for this 6-month period, what may happen is that the valuations will start to look okay again. So, in the next 6 months, do you see any trigger for everything to fall off a cliff? Unless there's a macro global event, I can't see that happen. So in that kind of scenario, we believe that while, how do you play this, right? So the way to do this is that wherever you have earning certainty, we believe that premium multiples will not contract. The places where we definitely see the most highest probability of this happening is the financials, which we've just discussed. Apart from that, Government capex after the election year issues as basically is looking okay. So is the real estate cycle. So if I had to pinpoint exactly 3 points, it would be the lending financials, and we are taking on a little bit more risk than before. And add to that real estate and derivatives like building materials and the domestic economy facing sectors.
Unmesh, stay on. The AMFI data for the month of May is flashing on the bottom of your screens. The net equity inflow for the month of May is at 18,995 crore, and it is significantly lower than what it was for the month of April, which stood at 24,253. So it is a multi-month low is where you're seeing the overall equity inflow for the month of May. The large cap fund inflow has also halved from last month. The net equity inflow now at almost 19,000 crores compared to 24,253, which is a sub 20,000 number after a very long time is what we are seeing in the net equity inflow number. The small cap fund inflow has also declined from last month, but not as much as the large cap funds. But so numbers coming in there on the AMFI data there, the large cap funds have halved from last month. Is a sub 1,300 number. Mid cap funds also seeing a bit of a contraction in terms of flows when compared to last month. So 2,800 crores compared to 3,300 crores is the number that is coming in. And the large cap flows fund inflow at 1,250 crore, which is also the multi-month low, which is the lowest since July of last year. So it's almost at a one-year low for the large cap funds. The small cap funds too at 3,200 crores. We'll get the all-important SIP numbers in just a bit. These equity flows have been tapering down over the last few months, and this is possibly the fifth straight month of contraction in equity flows. Then the equity flows have been contracting every single month since the start of the year. It stood at around 41,000 crores in the month of December of last year, and since then it has been on a downward trajectory, as you can see on your screens, from 39,000 crores. That net number has almost halved onto almost 19,000 crores now in the month of May. So in 5 months the net equity inflow has halved. Maybe now that the markets have started to stabilize, we could see some reversal. And if we get a quick reaction in from Unmesh as well before we get our guests in. Unmesh, if you can still hear me, what do you make of these inflows that have into the markets that have reduced on a month-on-month basis? Now, with the market stabilizing, do you see that number going up again? Because mutual funds are sitting on record cash, but there will come a time when that cash will be put to use, and then the net inflow going down, would that become a headwind for the market, because it is the domestic flows that have kept the markets higher so far?
Yeah, so look, there are three factors, of course, as when you look at flows. One is that, whenever this data starts to flash, the first thing we do is take a deep breath, because there is a fair bit of nuance to this data. I could see some of the ETF data, for example. So we'll have to see the mix of this. In any case, the headline number seems that it has weakened a bit. But having said that, what we think is that there are three things. One is that while the domestic flows had kept the market buoyant, that was in the scenario of incessant selling by FPIs. That has kind of receded, and that honestly is something that we don't expect a very sharp sell down from FPIs, given valuations are a little bit more reasonable, as we were discussing. And also India currency against the USD has been okay. And on top of that is the concerns in the rest of the world. So from that perspective, it will have to be seen in aggregate. The other is, as you rightly said, that there is a record level of, and that is something I'll wait for today's data as well to see how much is the cash level for the mutual funds last quarter. So if you look at the shortfall from January till today, if you just look at even if they deploy the cash, to get to a cash level of around 3 or 4%, that can mean multiple months of continuous investments into the Indian market. So it has to be seen in context of how much cash is already there. Plus, the fact that even today it is a 19,000 crore inflow. So that also has to be deployed into the market, and the FPI selling is not as incessant. So do I think that as a result of this, there could be a correction in the market? Maybe that could be the trigger for this inflow number to actually start going up again, because it seems like a buy the dips kind of market for the last maybe 5-7 years. So not overly concerned. We look at the nuanced data and figure out what actually is happening.
But it's quite a sharp fall, right? Month on month, it's about close to, I think, a 20% kind of a fall seen in the total equity inflows. And last time in April, large caps had bucked the trend.
Yes.
So there was a moderate decline in the mid and small cap inflows, but large caps had shown growth in terms of inflows. But this time, all the three segments are weaker. We have with us Suranjana Borthakur, Head of Distribution and Strategic Alliances at Mirae Asset Investment, and Sandeep Bagla, CEO at Trust Mutual Fund, joining in. Sandeep, let me start this discussion with you. Time to get concerned. I think this would be what, fifth, sixth month in a row we've seen a decline in equity inflows. And what is the cash holding with the mutual fund industry on an aggregate, and what would explain this May number?
Hi, good afternoon. Yeah, I don't think it's a time to get any concern. The main source of inflows in mutual funds, and probably the right barometer, would be the SIP inflows, and those numbers are robust. These are the numbers which are going to come month after month into the industry for the future years to come. The bulky inflows and outflows can happen. There could be profit booking. See, there are concerns on growth. There is uncertainty over the Trump tariffs. There are political issues, geopolitical issues. So it is only fair that the inflows will take a breather and people will book profits from time to time. I don't see it as any concern for the flows for the future of the mutual fund industry at all. There is also the issue that, how much cash is there. I would assume that about 5% cash would be there in the industry. And I have said it earlier also, this cash has been created because the earning growth and earning outlook is slightly unclear. This cash will be deployed only when the earning cycle will pick up and there is more clarity. So I think this is a normal level of cash in the industry given the overall scenario, and it will not come down. So I don't think that mutual funds are going to deploy in a hurry. Only when the outlook improves, that money is going to get invested.
Suranjana Borthakur of Mirae is also joining in. Suranjana, good morning. Thank you for joining in. Would you be concerned? Sandeep is not concerned considering the reduction in the inflows that you've seen. Would you be concerned looking at this number, especially considering the fact that the markets have now started to stabilize over the last few months? So then if a market being in a downward trajectory and you see a decline in inflows, you may understand that. But what do you make of this decline in inflow when the markets are stabilizing?
Good morning. I think I would agree with Sandeep. I think the numbers don't look very concerning. But of course, in terms of the new inflows, if you see, I think all categories, mostly the numbers have come down a little. Multi-cap is the only category probably which has gained from last month. And I think flexi-cap has probably fallen the most. I think if we look at from an investor point of view, if we stay invested or don't redeem funds, that is also a big positive point. I think in these volatile markets, if anybody requires the money, they should take out the money. But if in case they do not require the money, the advice is to stay invested probably for a longer period. Arbitrage has also gained as a category, I believe, and otherwise, mostly MAF or equity savings, etc., have also come back. So I think equity categories as such, it's not a dramatic fall. As long as the SIP numbers are intact, I think it's okay.
But I think in the month of May, per se, the markets were higher. I was just trying to calculate. But if I remember, I think overall the Nifty or the mid-cap index had given a positive return. So in that context, are you surprised that we've seen this extent of outflows, May versus not outflows, but a decline in the inflows, a moderation in the inflows?
I think also it must be seen in the context. See, there's one issue that once the returns start picking up, the flows will also pick up. So the flows are somewhat influenced by the returns in the immediate past. So I think there are two positive factors. One, the returns have been good, which should bolster the confidence of the retail investor. Secondly, interest rates have come down and gradually deposit rates will also come down. So I think that will also sort of nudge the investor to invest in avenues which are potentially higher return generating. So I think given the fact that interest rates have come down and the economic outlook should improve, I think these two factors are going to contribute towards future flows. So I think the future flows should pick up, and I think the performance and the liquidity both will matter.
Suranjana, the large cap fund inflow, which bucked the trend last month, as Reema was highlighting, that is down almost 50% from last month when it comes to the inflow number. The mid cap and small cap fund figures, yes, they have declined month on month, but they are fairly okay when you look at the headline number, at least. It's not as drastic a fall as the large cap fund is. Whenever the stabilization of flows does happen, do you see the large caps now getting a higher share of the inflows, especially because now there is a consensus building up that it is the large caps where is the place to be in the market, considering the fact that the mid caps and small caps have run up significantly? Do you believe that is likely to happen, or with the mid cap and small cap funds, or even the flexi cap funds, or any other fund for that matter, continue to garner more inflows?
So in my mind, two parts to it. I think firstly, overall, if we see the downfall that has happened in terms of the inflow number, like I said, it's not a dramatic downside. It's still about 20,000 crores almost, which has come in. I think in terms of valuations, obviously, large cap category is relatively looking much more attractive. But our thought process has always been that if you have a longer time span in terms of investments in India, you should have enough allocation to mid and small as well. It's only when you have enough allocation in the broader market that you will be able to create wealth. But having said that, if you look at the inflow numbers, I do see a larger cut in terms of flexi cap as well as the large cap segment. The mid and small haven't fallen so dramatically. But what is encouraging to my mind is probably the inflow if we see in terms of the hybrid category. What Sandeep was also mentioning, probably the fact that, the deployment is awaited in terms of additional inflows. There is a larger inflow which has happened in the arbitrage segment also, which is probably right now the money which people want to deploy in the market, but are keeping in the arbitrage segment for the time being. So if we see the hybrids from a 14,000 crore to 20,000 crore is actually a very encouraging number. And I think categories like multi-asset, etc., which actually has been very attractive for the last few months, that continues to be a category which attracts new money. And I think long-term inflows have been intact there. BAF is another category where the inflows have gone up. To my mind, in a volatile market, probably the inflow in all hybrid categories increasing is very encouraging. In equity, probably there will be a little more time to make the additional deployment. But when additional money comes in, probably larger money would go into the large and flexi cap categories.
Got that. Thank you very much for that. It's still the 51st month of net inflows into the Indian equity markets. The only thing is that there is a sharp drop-off compared to April. So equity inflows are moderated for the 5th consecutive month now. And month on month, it's a decline of close to about 20%. Awaiting the SIP inflow, which up until now has been very, very resilient. We'll thank both our experts for joining in and sharing their insights. Here is some update for all our viewers as we slip into a break. Give an edge to your investment and trading journey with our all-new Money Control Super Pro. Explore Alpha Generators, one of Super Pro's super feature, and get live trading and investing ideas from SEBI-registered research analysts like Ambrish Baliga, Nuresh Mirani, and others. Get your investment superpower today. Subscribe now.
Welcome back. A corporate conversation then. Vishnu Prakash, Punglia's shares are in focus after CARE Ratings downgraded its ratings and its outlook on its long-term bank facilities. Mr. Manohar Lal Punglia, the managing director of the company, is joining in on the show. Manohar Lal जी, बहुत-बहुत शुक्रिया हमसे जुड़ने के लिए. सबसे पहले तो आपसे यही सवाल पूछना चाहूँगा कि ये जो रेटिंग डाउनग्रेड आई है केयर की तरफ से, ये वर्किंग कैपिटल की स्थिति थोड़ी सी ख़राब होने की वजह से और रिसीवेबल्स में इजाफा होने की वजह से ये हुआ, ये कहा गया है केयर ने अपने रिपोर्ट में. क्या फिलहाल स्थिति में कोई सुधार आया है? वर्किंग कैपिटल की स्थिति सुधरी है? इस वक्त आप क्या रोशनी डाल सकते हैं इस पर?
सर, अभी जो अपने मार्च के बाद के अंदर जो हमारे जेजेएम के जो फंड थे गवर्नमेंट से, काफी कुछ जैसे एमपी में और यूपी के अंदर हमारे फंड्स भी रिलीज हुए हैं, और इसके साथ में अभी थोड़ा राजस्थान में रुका हुआ है, वो भी अब आने वाले अपने क्वार्टर के अंदर हमारा वो भी फंड रिलीज हो जाएंगे। और जो हमारी जो अपने बढ़ा है लोन, तो इसका रीजन ये वो शॉर्ट टर्म के लिए बढ़ा है, और उसको भी अब हम धीरे धीरे नेक्स्ट क्वार्टर तक हमारा उसमें भी सुधार हो जाएगा।
तो कितने फंड्स रिलीज हुए हैं मनोहर लाल जी? और राजस्थान से जो आप कह रहे हैं कि फंड्स अभी भी थोड़े से रुके हुए हैं, वो कितने फंड्स अभी बैलेंस है, और क्या दूसरी और तीसरे क्वार्टर तक ये सारे फंड्स जो है वो रिलीज हो जाएंगे?
हाँ बिल्कुल, सेकंड क्वार्टर और थर्ड क्वार्टर तक हमारा पूरा फंड रिलीज हो जाएगा, और इस क्वार्टर के अंदर भी, जून क्वार्टर के अंदर भी अभी तक में भी काफी फंड, जैसे एमपी यूपी के अंदर काफी हमारा फंड क्लियर हो गया है।
सर, आप कुछ नंबर्स बता सकते हैं अभी क्या आपके रिसीवेबल्स है एज ऑफ नाउ, और आप बोल रहे हैं कि जून सितंबर तक ये घटेगा, तो क्या नंबर की अपेक्षा कर सकते हैं हम?
नंबर तो मैं अभी नहीं बता सकता आपको, पर ये है हम आएगा आपको अपने जून क्वार्टर के रिजल्ट में कुछ मालूम पड़ जाएगा। और इसके साथ
अंदाजे से बता सकते हैं कितना है
सर?
अंदाजे से आप बता सकते हैं कि रिसीवेबल्स क्या है और कितना घट सकता है? 10%, 20%?
250 करोड़ के आसपास है।
250?
650।
और कितना कम हो सकता है सर?
काफी कुछ कम हो जाएगा आपके।
और डू यू थिंक कम होने के बाद आपका रेटिंग रिवर्स हो सकता है, बढ़ सकता है?
बिल्कुल, वो तो जैसे ही हमारी अपने परफॉर्मेंस अच्छी आ जाएगी तो अपने आप रिवर्स ही होगा, और ये भी ये शॉर्ट टर्म के लिए है, ये प्रॉब्लम आई है, और धीरे धीरे ये भी हमारे अपने इसमें सुधार हो जाएगा।
इस वक्त आपकी ऑर्डर बुक की स्थिति क्या होगी मनोहर लाल जी? आपने कुछ 5,500 करोड़ की ऑर्डर बुक के बारे में बताया था अपने अर्निंग्स कॉल में, और साथ ही साथ ये भी बताया था कि जल जीवन मिशन के वजह से काफ़ी सारी कठिनाइयों का आपको सामना करना पड़ा है, और वाटर ही एक सेगमेंट है जो आपका सबसे बड़ा सेगमेंट है। क्या आगे चल के इस वित्त वर्ष में आप लोग वाटर के अलावा रेलवेज या अन्य जो आपके सेगमेंट्स हैं उस पर ज़्यादा आप ध्यान केंद्रित करना चाहेंगे, या वाटर ही आपका सबसे बड़ा सेगमेंट बना रहेगा?
तो वाटर तो हमारा है ही, ऐसे अभी आज की तारीख में 57% है वाटर के अंदर। इसके साथ साथ में अभी हमने जो लास्ट ईयर भी रेलवे के अंदर ज्यादा फोकस किया है, रेलवे और एनएचआई पे फोकस किया है, और वो भी जब जितने भी हमारे वर्क है वो सब कंटिन्यू चल रहे हैं, तो हमारा भी फोकस है कि रेलवे के अंदर भी अच्छा खासा हमारा फोकस रहेगा आगे भी, और वाटर में तो हम लोग कर ही रहे हैं। और अभी आज की तारीख में हमारे पास 5,363 करोड़ की ऑर्डर बुक ऑलरेडी है हमारे पास में, जिसमें 57% वाटर की है, रिमेनिंग रेलवे और एनएचआई की है हमारे पास में।
सर, आप बोल रहे हैं कि जो प्रॉब्लम है, मसला है, शॉर्ट टर्म है, पर केयर का जब रिपोर्ट हम पढ़ रहे हैं वहां बता रहे हैं कि कंटिन्यूड हाई वर्किंग कैपिटल इंटेंसिटी इन द लास्ट 2 years। अगर मसला सिर्फ 1-2 महीने का था, 2-3 महीने का था, तो फिर शायद डाउनग्रेड ना आता।
ये मैडम, ये 3 क्वार्टर से हमारा ये मैटर चल रहा है, क्योंकि पहले यहाँ पे सेंट्रल गवर्नमेंट के इलेक्शन हो गए, फिर राजस्थान और एमपी के अंदर स्टेट गवर्नमेंट के इलेक्शन हो गए, इस कारण ये सब रुका रहा। उसके बाद गवर्नमेंट चेंज हुई, और तो ये जल जीवन मिशन के फंड नहीं आए थे, तो ये 3 क्वार्टर से मसला चल रहा है। 1 क्वार्टर हमको और लग रहा है कि होगा, उसके बाद में ये कंटिन्यू मतलब स्मूथली हमारा हो जाएगा अपना फंड का मैटर।
फिलहाल के लिए तो इस तिमाही में जो आप 5,363 करोड़ की ऑर्डर बुक की आप बात कर रहे हैं, इस तिमाही में आपने किसी ऑर्डर के लिए बिड किया है? क्या कोई ऑर्डर मिलने की उम्मीद है? क्योंकि ये तिमाही तो लगभग अब खत्म होने के कगार पर है, तो आप इस तिमाही में कोई ऑर्डर है, या आने वाली तिमाहियों में किसी ऑर्डर की बिड आपने की है?
इस तिमाही में भी हमारे काफी ऑर्डर बुक्स, मतलब हमने टेंडर पार्टिसिपेट किए हैं, कुछ वर्क में हम L1 भी हो गए हैं। अभी मैं डिक्लेयर तो नहीं कर सकता हूँ, उम्मीद है कि इसी क्वार्टर में हमको 1-2 ऑर्डर अच्छे मिलने वाले हैं।
सर, आप कुछ गाइडेंस दे सकते हैं FY26 पूरे साल के लिए, रेवेन्यूज, मार्जिन्स, ऑर्डर इनफ्लोज?
हमारा इस फाइनेंशियल ईयर जो नेक्स्ट आने वाला है इसके अंदर हमारी अच्छी प्रोग्रेस भी रहेगी और हमारे मार्जिन भी बढ़ेंगे और जो हमारा टर्नओवर है उसमें भी 20 से लेकर 30% तक हमारा इजाफा होगा। और मैं सबको जो भी हमारे शेयर होल्डर है सबको मैं विश्वास दिलाता हूं कि हम हम प्रमोटर और पूरा हमारा जो ग्रुप है वो अच्छे से हम काम कर रहे हैं और आने वाले समय हमारे लिए अच्छा रहेगा।
तो कहना उचित होगा मनोहर लाल जी के 10 से 15% की टॉप लाइन ग्रोथ हम FY26 में आपसे उम्मीद रख सकते हैं। 10 से 15%।
बिल्कुल सर, पक्का।
चलिए, बहुत बहुत शुक्रिया मनोहर लाल जी हमारे साथ जुड़ने के लिए और आने वाले समय के लिए भी, और ये जो मसले है वो जल्द सुलझे इसकी हम कामना करेंगे। द मैनेजमेंट देयर ऑफ Vishnu Prakash are Punglia hopeful that the issues that they are facing with regards to their receivables would be resolved within the next couple of quarters. But for now, we call time on this edition of Trading Hour. We leave you with the Nifty still just 40 points higher. And the flashes on your screen though just before we do that, and it's regard to the BSNL and MTNL for internet and landlines, the cabinet mandating there, and BSNL and MTNL are already meeting telecom companies. They are meeting their needs of the central government and the armed forces. It's regard to the BSNL versus private telecoms, and both the companies have now become competitive with the centre's revival packages, the 3 packages that they received over the last few years, be it in 2019, 22 and 23, so over the last 3 years. And BSNL is to provide a one-stop stop. The centre has written to the state governments requesting for use of BSNL and MTNL's services, and they have also written the fact that the companies have now become competitive after the relief packages that were given to them. We'll get you more details on this as the day goes by. And MTNL for now 3.5% or about 3% higher on that stock as well. But for now, we take your leave on this edition of Trading Hour. From Rima, me and the team that put this show together, thank you so much for watching. Halftime report on the other side.